Welcome back, my friends. Thank you so much for tuning in. This is Silver Slayer. So now let's talk about how Comex deliverable silver is far less than imagined, as 50% of eligible is not available. See, the silver shortage is much more serious and can be much more devastating than people realize. I've been talking about this for years now. People thought I was exaggerating, thought I was full of crap, that I didn't know what I was talking about. But guess what? Numbers don't lie, and the numbers haven't been adding up. And we know that the Comex is a facade, and when it collapses, the true price will get exposed. Not just myself, though. David Morgan, Ted Butler, Keith Neumeyer, Mike Maloney, even Andy Schectman himself have been exposing this. See, the LBMA, Comex vaults, LME, these vaults are damn near empty. Empty. And they themselves have been admitting this. The silver shortage is in a very, very, very dangerous place when we look at the macro, not the micro, the macro. Why we need silver. We need silver for the world to go green, for climate change and global warming. If we don't have enough silver for the world to go green, what does that mean? David Morgan just put out a beautiful video the other day talking about this, that we don't have enough silver to go green. I've covered articles before, people saying if you think we have enough silver for the entire world to go green with EVs and solar panels and 5G towers flooding the earth, then you're in la la land. And that's just the harsh truth and the reality. Something's got to change. Well, we know that the Comex is a facade. All of those contracts on there, the people that think they own that silver physically, is not there. If all those people that own that silver online think that they actually have that silver stored in a vault somewhere, they're crazy. Every single ounce you own in your bare hand, theoretically 250 other people own that same ounce on the Comex. Well, they think they own that ounce, but they don't own that ounce. That silver online isn't theirs. It's just a number on a screen. I always say if you can't hold it, you do not own it. So anyways, let's look at this. Just more information coming out. See, mainstream media is finally catching up. The cat's out of the bag. You cannot suppress this anymore. And imagine in 5-10 years from now, 5-10 years from now, what it would look like. What it would look like if we already, and we're just now starting this new green era, if we're already having a hard time finding silver, imagine in 5 to 10 years how difficult it would be, as silver's a byproduct. Most silver's thrown away. Everyone's holding their silver. So the EV demand, solar panel demand, already up 15% this year. Already exceeded 1.21 billion ounces in demand. Production slowing down. Recycling isn't really putting a dent in the numbers. It's just not realistic, folks, and I hope you understand that. So anyways, let's look at this article. The link will be in the description. It's from bullionstar.com. And this is just another piece of evidence. Back in April 2020, during the LBMA Comex gold crisis of 2020, when gold prices on Comex diverged nearly $100 higher than gold prices in London, and the LBMA and CMA, which the Comex, rushed out multiple combined statements trying to assure the market, which that is the article right here, assure the market about healthy gold stocks in New York and London, while at the same time scrambling to send shipments of gold bars from London to New York. There appeared some intriguing correspondence between CMA and the Commodity Futures Trading Commission, which is the CFTC. See, the Comex is all just a facade. It's a facade. And like the nickel market, right, remember what happened? It's going to take longer and longer for these people to get their contracts or just denied in general, and the whole entire exchange could freeze or even collapse. Even like Patrick Heller explained very, very, very thoroughly what that would look like. Andy Schectman talks about it all the time as well. That day will come. That correspondence, which was a submission by the Comex to the CFTC, certifying a doubling in position limits on gold futures trading from 3,000 contracts to 6,000, contained the bombshell admission that 50% of the eligible gold in the Comex approved vaults in New York should be subtracted from deliverable supply, since that portion of gold in eligible category is held by long-term investors. It has nothing to do with Comex gold futures tradings. For background, see the article right here, Comex bombshell, yada yada, which you can go on this article and check that out as well. Let's focus on silver though. Andy Schectman's talked about this. And he's even went as far as talking about the US Mint, because since he's still one of the only few authorized dealers that works with the US Mint, even the US Mint cutting back half of gold production or eagles. And he's saying why? There is no shortage of gold. So instead of all the gold in the Comex approved vaults, which is total of registered category and eligible, being available to back the Comex gold futures tradings, the CME was saying, no, the estimated deliverable supply of gold is equal to registered 0.5. So let's look at this. To put the LBMA silver vault hemorrhage into context, during 1 month, September, LBMA London vaults lost more than 45,166,000 troy ounces than is the entire Comex register category, which is 40 million. If silver buyers turn their attention to the Comex, then boom. Think about that. Did you hear what I just read? Here, let's process this. To put the LBMA silver vault hemorrhage into context, right? The facade that is a ticking time bomb waiting to collapse. During 1 month, the month of September, LBMA London vaults lost more than 45 million ounces. 45 million ounces. Where'd that silver go to? India? The BRICS nations? Why? That is the entire registered category. That's more than the entire registered category. If silver buyers turn their attention to the Comex, then boom. Here's eligible, registered, and deliverable. And this kind of reminds me of the Hunt brothers in 1980, where they owned up to 77% of the global silver supply. All of that was on the Comex and then turned into physical delivery. Well, that silver couldn't be delivered because there's not that much silver floating around, and that would have exposed the facade. So what the government do, they banned silver. Silver Rule 7, banned silver. And during that facade almost being exposed, silver was the highest price it's ever been still till this day. And that was on a much smaller scale with much less severe consequences than what is today at stake. So for anyone confused about the Comex, eligible and registered categories of inventories join the club. Near everyone has been, at one time, confused by these terms. So here's a quick tutorial, and I'm so glad they brought this to light, because I know a lot of you are new, and even if you're not new, a lot of people that just buy the physical don't know much about this. So I'm glad that they brought this into play, since a lot of this nowadays is intertwining into the physical price, or even if you want to talk about premiums or where the price is headed. So this is important stuff. Pay attention. Eligible is the metal that is acceptable for delivery against the contract. For example, which meets the specifications and approved brands for the contract, which warrant has not been issued. Registered metal is metal for which has a warrant or warrant has been issued. So these are warrants classified as electronic documents of title under Uniform Commercial Code UCC and are issued by exchange-approved Comex depositories. Each warrant is registered at the exchange and linked to specific bars with identifiable and unique warrant numbers traceable by each Comex depository. See, there are 1,000-ounce bars, and each contract, and when you buy silver on SLV or whatever, it's all 1,000-ounce bars, right? And it's supposed to be in a depository that's actual silver somewhere, and it's yours. And then also noting that Comex depositories equals Comex approved vaults, Comex approved warehouses, right? You might ask where I'm going with this. Where I'm going with this is silver. Because while Comex operator, CME, revealed its hand about the Comex deliverable gold supply in April 2020 during the initial panic phase of the LBMA Comex gold crisis, it also turns out that the CME also revealed its hand about the Comex deliverable silver supply during the initial panic phase of the LBMA Comex silver crisis, aka the beginning of the silver squeeze frenzy in February 2021. Now, there's also something even more sinister to bring into play. That almost exposed, right? Silver got up to $30. That almost exposed that silver's, or almost brought to light silver's true price, or starting to, with the fundamentals, low supply, high demand, right? The fundamentals. But silver's price is suppressed. It's manipulated. This isn't some type of conspiracy. A fifth J.P. Morgan trader just got sent to prison, or a fifth one is going to. You can't rig premiums, though, the physical price, but you can rig and you can suppress spot price. So we're still getting an idea of this from spot price. Spot price is or the premium. Spot price is basically irrelevant, because if you have to pay $40 for an ounce, but spot price is $25, then which price really matters? The $40 an ounce. So, silver bombshell, deliverable supply with 50% haircut. And what the Comex operator CME revealed about deliverable silver in February 2021 was as equally startling as what the CME revealed about deliverable gold in April of 2020. Now, also remember, April 2020, this was around the time gold was $2,000 and silver was $11. Remember, gold broke past $2,000, the highest price during this time. The February 2021 eligible silver revelation also came in a submission by the CME to the CFTC, certifying a doubling in position limits, this time on its silver futures contracts from 1,500 to 3,000. The CME 5,000 ounce silver futures contract is the world's most traded silver futures contract, and it is physically deliverable. 5 bars of refined silver cast in 1,000 troy ounces. Like I was saying, they're all in 1,000-ounce bars. For whatever reason, this February 2021 CME submission, which had great timing by the CFTC and CME in being teed up just as the silver squeeze threatened to push the price a lot higher, it seems to have gone under the radar until now and has not been mentioned anywhere as far as I can see. But it is critical in highlighting given the massive outflows of physical silver, which we are currently seeing from both the LBMA vaults in London and the Comex registered silver category in the Comex New York. They both came out and said it. London Metals Exchange, that's obvious as well. Andy Sheckman talks about it all the time. He's talked about this exact situation, but it is great to have an actual article break down this as well and give a little more context with proof in the pudding. So, here is the chart. The gray line is Comex silver. The green is registered stocks. Now, the Comex registered silver stockpile is 38.13 million ounces. Now, why? Why? Because those say that the Comex silver inventories are not just registered silver, but also include eligible, are not seeing the full picture. 50% haircut. Now you see it, now you don't. In its February 2021 submission, the CME included an updated analysis of deliverable supply in connection with the increased position limits for the silver futures contracts, which it attaches as Appendix C to its submission, and which can be seen on the CME website here and the CFTC website here. In this Appendix C, which has a full title of Commodity Exchange Comex Analysis of Deliverable Future Supply, CME states that the key component in estimating deliverable supply is the portion of typical depository stocks that could reasonably be considered to be readily available for delivery. And then goes on to quote the CFTC's definition of deliverable supply as the quantity of the commodity meeting the contract's delivery specifications that can reasonably be expected to be readily available from short traders and saleable by long traders at its market value. In normal cash marketing channels, at the derivative contract's delivery points during the specified delivery period, barring abnormal movement in interstate commerce. So for example, or for Comex silver, the 10 delivery points or approved silver depositories on the date of the CME document was written were Brinks, CNT, Delaware Depository, HSBC Bank, IDS, Delaware JP Morgan, yada yada yada. As of October 2022, all of these silver depositories are still approved by the Comex, with the exception of the Bank of Nova Scotia, which withdrew its vault from being Comex approved on March 1st, 2021. Like its eligible gold bombshell in April 2020, the eligible silver bombshell in CME's February 2021 document stated that the exchange recognizes that silver is used as an investment vehicle, such as some silver stock may be held as long-term investment. Because of this, the state's the February 2021 CME submission. The exchange, in effort to represent a conservative deliverable supply that may be readily available for delivery, may be determination of to discount from its estimate of deliverable supply 50% of its reported eligible silver at the time. So now we go into this. Comex silver vaults dropped to 300.4 million ounces, lowest level since June 19th, 2019. Registered unchanged at lowest level since September 28th, 2017. Open interest now equal to 226% of all vaulted silver and 1,802% of registered silver. Now you can go into running the numbers, right? And the numbers don't lie. And the numbers expose all. You could try to, someone could come out and try to have the best debate or the best, word play or word salad or make themselves sound all official and yada yada. They work with this company. But at the end of the day, the numbers don't lie. And what we know is, which is Investing 101, the most basic, bottom level, or common sense for investing or how to make money is low supply, high demand. Invest into something that is scarce, that is rare, and as people want it, the price goes up. Low supply, high demand pushes the price up. Same as buy low, sell high. So I'm not going to go into all this. Like I said, the link to this will be in the description. A lot of this, you guys probably aren't too interested in reading, and if you are, I always link these articles in the description. So they're talking about the 50% of eligible silver is not deliverable, which means that that's half of what is already low, and meaning if you think that the Comex facade was already alarming, it's even worse. It's even worse because that silver is non-existent. That silver cannot be pushed out. And then look at this. The SLV is 71% or 71.8% of JP Morgan's eligible silver. Remember, JP Morgan is the most shady bank in the world. A fifth employee just got caught rigging, manipulating, suppressing the price, backing. We're talking about decades of manipulation. It's called spoofing. Placing a false buy order or sell order on the exchange, canceling the order before it goes through, tricking everyone else on the exchange. A whole bunch of silver is being bought up or a whole bunch of silver is being sold, and those people do what they do, panicking usually, or looking at the volume or volatility or whatever on that exchange, and then JP Morgan will cash out and do what they do after they've already manipulated everyone else's perception of that false market. So iShares Silver Trust, the SLV, 103.176 million ounces, is held in JP Morgan Vault in New York. JP Morgan is the worst, and I mean the worst, bank in the world. Tag team paper silver scam. Comex and LBMA propping up their paper silver market. And this has been going on. So here's a conclusion. I'll try to just highlight a little bit. So let's look at this. I don't want to go too deep into this. So Nikki Shields, precious metals analyst, echoed that view when reporting back from the LBMA's annual conference in Lisbon last week, when she said that conference delegates predicted a super bullish silver price, $28.30 in a year's time, as the focus was on physical tightness driven by unprecedented demand. Now, I've even seen more bullish takes. I'm talking about up to $37 in 2023 and up to $47 in 2024. And if it hits that $47 level, especially breaking above the $50 level, which is the highest price ever, we would be talking about triple-digit silver very shortly after. Now, remember, if you watch my channel, you all know that I say triple-digit silvers in the year 2025, maybe 2026 at the latest. But remember, that's just from the supply deficit. That's just from supply and demand, the fundamentals. If you also want to incorporate the micro and not just the macro, the monetary side of things, why people also put their money into silver as a hedge against inflation, as the dollar's collapsing, as a safe haven asset, that could push things even quicker. So add all that, and then you have the unprecedented demand for physical silver in India, where imports have been zooming ahead. Totaled 1,812 tons in July, 1,149 tons in August, and that's September around 1,700. Up until August 2022, 8 months, India's silver imports totaled 6,517 tons. Adding September's, we're talking about, if annualized, would be 11,000 tons, which is one third of the world's silver supply annually. Now, India is part of the BRICS nations. Remember, BRICS, BRICS, Brazil, Russia, India, China, Saudi Arabia. If Russia, India, China, Saudi, if all these countries in the BRICS nations, there's many more, by the way, are buying up boatloads of gold and silver, what does that mean? Why? Well, they are putting together a digital currency backed by physical commodities, so it makes sense. So, regardless, this is another important part. People point to the Comex registered silver total and say that silver can move from eligible category to the registered category. But that's not entirely true and only applies to a portion of the eligible category. More eligible category silver would, of course, come into play and move to registered, but only at a higher silver price. With silver demand firing on all cylinders and with demand destinations such as India securing an even higher percentage of annual silver supply, expect the silver market to provide plenty of fireworks in the months ahead. Months ahead, not years ahead. Things are getting crazy. Things are getting crazy, folks. And if you think that this is just the start, you're right. If you think that this is going to blow over, you're wrong, or more than likely. I mean, we're in for a lot of shenanigans, a lot of truth being exposed, and I hope you're here to stick around because I'm gonna cover it all. You're never gonna miss a beat if you're subscribed to this channel. If you thought this video was educational, informational, at least entertaining, make sure to hit the like button. I post daily videos every single day, giving you the newest, latest, freshest, most up-to-date recent information in the world of precious metals, more specifically silver. The link to this article will be in the description. Make sure you like the video if you did like this video. Make sure if you want to go buy some of that shiny stuff, or gold stuff at least, gold or silver, send an email to the bottom left-hand corner, info@milesfranklin.com. Let them know Silver Slayer sent you. Andy Schechtman's the CEO of the company. That is the most trusted dealer. Make sure that, you don't even have to make sure, but purchasing through them can build a business relationship. You know, they'll get to know you, more personalized. That definitely will benefit you in the long run, especially since Andy is one of the top dogs, one of the biggest names, biggest players in the game. And if he knows you and you keep buying through him, that could be extremely beneficial compared to just buying from some random company where they don't care about you. They don't even know, you don't know their name. They don't know you. It's just a transaction. Sometimes that can be convenient, which is also why they're posting their online site. But buying from them through the email, you'll get to know him. You'll get to know them, ask him questions. It's a very good system. Now, I hope you did enjoy this video. If you did, please like the video. Leave a comment. Let me know what you think. Silver shortage is finally getting exposed, something I've been talking about for a long time, and I'm glad to see it. Thanks for tuning in. This is Silver Slayer. I'll see you guys soon. Peace.